Good evening, everybody, and welcome to Alchemy Trades. This is Host Logic. Tonight, we're going to go over some more TA tools that we can use to kind of help you better trade with. I'm sorry I haven't put out any videos recently or any trades as well. Just between the holidays and then jumping right back into work immediately after Thanksgiving, I've had a lot of smaller jobs versus my longer jobs that kind of give me a more leisurely schedule. I could get into the charts and call out some trades and just even do some trading myself. As you can see with Twitter, I've not really done a whole lot of trading myself recently. I've literally had to work my entire 14-hour shift, and then it only gives me about an hour to an hour and a half at nighttime, and with the markets being either so extended one way or the other, it's just hard to really find anything to get into. Prices have been so overextended, it's just, for me, I don't like jumping into something when it's just so much in the upper range, but things are finally starting to come back down a little bit to where maybe we can get into some stuff here. So this is Cake BUSD. I like this because it really does like the range that we set with it. It respects the price really well. When it drips below it, chances are it's going to come right back up and then start doing its thing here. So we're going to start with some indicators that we like to use. We're going to start with moving averages first. And I'm going to click this 3 times. So we're going to add 3 of them. We'll go to settings. The first one we're going to make this one yellow. Again, this is just my style. You could choose any colors you like. This is just how I was trained when I learned how to do it, so this is just what I like to kind of keep with. The second one, we're going to change a couple of things in here. We're going to keep this one blue, however the input, we're going to make this one 21. And then the third one, we're going to go to settings. We're going to make this our 50 moving average, and this we're going to make red. You could also make this a little bit darker so you kind of get a better idea what's going on, because things can start getting clustered very quickly. So moving averages, a couple of very simple things. Your 9 MA is basically 9 candles back of your average pricing, and this is kind of what's been going on with it. Then the 21 and the 50 the same way. Now, the 21 typically likes to act as support or resistance, so it'll kind of hit that quite a bit more. You'll see it kind of price pulls away from the 21 and then comes back up, hits that 21 right on hand, and then kind of pulls back down again. So the 21 is really good to use as a support or resistance level. You see it's been riding this really hard all the way up. It came back down, pulled away really hard from it, came right back up to the 21, this candle did, and then just pulled right back down again. So that works really well for your support levels. And then the 50 moving average is just really good to kind of get an idea where your trend is. If it's trading below the 50, you're in a downtrend. If it's trading above the 50, if it breaks that, then you're going to be going back into an uptrend. But very, very important, you want to make sure that the candle actually closes above this moving average. If it just comes up to it, chances are it's not going to go any further. It acted as resistance rather than actually breaking through it, and then it's going to pull back down. But when something actually breaks through it, this candle closes through it, it's going to go up for a little bit. And how much up is really up to the markets really overall. So, when you're looking at a pair and seeing what's going on with it, you want to go over the overall crypto market. The last 24 hours, things have been pulling back pretty hard. But then we compare that to the last hour, we're not quite as far away as we were on the 24-hour chart, but we're definitely still pulling back a little bit more. This kind of just gives us an idea. You can just quickly scroll through the top 20. This gives you just a really good census of what's going on in the overall market, because if the overall market is dumping, no matter how good of a setup you have, if it broke through this 50 and looked like it could be going up, if the overall market is going down, this pair is going to be dragged down with it, because everybody's going to be getting out of what they're into and just start dumping it, and then it's going to just dump along with the market. What we can also use is what we call a fanning out technique. So I'll give you a good example on this one here. Let me find it. This is good right here. When the 9 is over the 21, that's over the 50, and it's fanned out, this is a really good indication that we're in a strong uptrend right here. And the further apart they are, the heavier the cycle is as far as your trend that it's going. So when all of these are what we call in line and fanned out, we're in a really good uptrend. As you can see, it respected the 9 really well. It would kind of pull up, come in and hit it, pull right back up, come down and hit it, pull right back up. So it respected the 9 really, really well and kept on riding it up. And again, right into our price range. Me personally, I am a price-driven trader. I go by its price. Where does it like to averagely trade into? What's it respecting? That's my range, so then that's what I like to set with. But when you add in some indicators, it just gives you an idea of what's going on and when is it time to get out of it. Because as you can see here, price is in a strong uptrend. The MACD is trading green. RSI is pegged at like literally 70, 80 right here. And it's going up. But as it's pulling away from the 50, eventually it's going to get tired because it's like a rubber band. As it pulls away, all that tension's being built. It's not going to break our pricing structure that we set. It's going to pull back down. And then as it broke and closed below the 50, we can now say that we're in a confirmed downtrend. So that's when it would be a good time to get into a short. Short that straight down to the bottom again of your price action, because again, as it pulls away from the 50 the other direction, it's going to want to snap back up again. So, you know, cake has been just really good. I mean, look at this. You could have it as it pulled below here. It's really kind of below our trading range. Came right back up the top, closed it out. Could have shorted on the way down, closed it out, longed it on the way back. It's just been doing really good. And then, I mean, respecting these ranges pretty well. This is where I've been setting the ranges up recently. It's really respected these ranges, so you get an idea of what's going on with, you know, your trade. So that's your moving averages. We're going to move on to the next one. The next one's going to be called the VWAP. The only thing I'm going to want to change here is I do like to make this yellow, and I like to make it very visible. That's just how I was taught to use it. You can see it a lot better. So VWAP is a really good tool, and let's look at how is VWAP calculated. Basically, it takes the total dollars traded for every transaction, the price, multiplied by the volume, and then divided by the total shares traded. So it's basically it's volume and price divided by this total volume. So basically, it acts as like almost like your 50 moving average, but it just takes your overall price and it's divided by its volume. So a lot of traders like to use this because as you see a lot of my charts, I'll add a line smack in the middle of my range that I like to do. And as you remember, I always like to make it red and then dotted. So I like to use this because I'm more of a price-driven trader because it kind of acts as that. But your VWAP, it does the very same thing. Because as price falls below and pulls away from VWAP, and it goes below our average ranges that we set, our floor here, it's going to want to pull right back up into it. And if a candle closes above it, chances are it's going to continue going on. And sure it does. It kind of comes above, pulls back down to VWAP, bounces right off of it, uses support, and then comes up again. But like with the 50, the further away, kind of like that rubber band, it's building tension, it's getting to the top of our trading range, it's going to want to pull back again. And the same thing, if price is trading above it, we're in an uptrend. If it's trading below it, we're in a downtrend. But that's kind of hard to get with a lot of, you know, pairs. If it's just above it, it's in a downtrend. If it's just, you know, it's just really hard to do that. This is why I like to add my ranges, because now I know where in the real, because if you just scroll way back, you know, you can't tell where things are at. And VWAP is great, but it doesn't really give you a whole lot of information. But then when you add in its trading range that it likes to respect, and you zoom in a little bit, sure enough, it does respect it quite well. You could have done really well with a lot of these trades by doing just that. But hindsight's always 20/20 here, you know. And again, same thing, you know, as it broke above VWAP here, that candle closed, it could have continued up its uptrend, but the overall market probably dumped with it. But this would have been a great time because it pulled back below our, you know, our price ranges that we set. Would have been a good way to get into this because most likely this is to continue up, probably to VWAP, and then want to pull back down again. So that's kind of a good way of having this indicator to help you know that, okay, maybe it's time to get out of my trade because, you know, if we got into it here and we traded up to this VWAP line, it's about 1.5%. I would probably want to at least look at possibly pulling out unless I know for sure what's happening with this. Is the market turned around and is it going to continue just trading back up and going up to at least the midline of our price range that we set? Okay. So we'll keep that for now. We're going to add the next indicator called Bollinger Bands. Now, Bollinger Bands is basically, go by the little description here, calculated by the moving averages of the close and standard deviation. So basically it's two standard deviations is what we like to say. So our middle line here is our center line of the Bollinger Bands, and then the upper level is 2 standard deviations above, and then again 2 standard deviations below. So price very rarely is going to close below this. When it does, that's also a good indication that, we might be looking to reverse and pivot back up no matter where we're at in the range. And if you add things like your MACD, it went from dark red to light red, so now we have our confluences now. RSI is now trending up. The Bollinger Bands is flipping over. It hit the bottom of this Bollinger Band right here. So yeah, this is looking like it could really do well and take this up at least to the top of the Bollinger Band, because again, it very rarely breaks above it, and if it does, it doesn't do it for long, usually no more than 3 candles worth, and then it's going to want to pull back down at least to VWAP, or then trend back down to the bottom of the Bollinger Bands, and then usually a few candles is the most it'll do, and not very long, and then it'll want to pull back up to it. So that's a good way to kind of get an idea of, do I want to get into this? Now, another good thing about Bollinger Bands is, as price is compressing, when it's really, really tight, the deviations aren't very long, that's going to tell you that price is just, really building up pressure. It's trading within a short, tiny range, up and down, and then it's going to explode outwards, like right here. As it's trending down, but then price constricts, it's going to make a decision on where it wants to go, and it's going to have a massive movement and break out of that. And you can kind of tell just before it happens, because these Bollinger Bands like to funnel out, as like we call that, and once it funnels, it's going to make a breakout and go one direction or the other. It's just up to you to figure out which way it wants to go. But if price has been trading below our trading range that we've set, and the MACD might be getting ready to cross over, or let's say, for example, RSI is at the very oversold area, that's a couple of confluences that it might be getting ready to go back up, especially if the market's been down for a couple of days. It looks like, it's been a really, really down market. Then it's been consolidating quite a bit. The Bollinger Bands are constricting. Chances are it's time for a reversal for a little bit at least, and you can catch that trading volume up. Same thing for its downward momentum, as we're kind of constricting again. You can see here it constricts a little bit, funnels out, doesn't have a massive explosion, but this time it decided to trade to the downside because RSI has been trading up a little bit. It was in the middle of our range, so this was really hard to kind of guess what's happening with it. But again, here it looks like we're having the same thing here. Price has been trading in a constricted range for a while. It looks like it's wanting to funnel out right here and then figure out where price is going to. So again, this gives you an idea. It's in the bottom of our trading range. RSI has been trading in the oversold range. We're going from a dark red to a light red, and this is starting to funnel out a little bit. So as it's in the bottom of this would have been a really good time to get into this trade and probably write it up to at least VWAP, or possibly up to the center line of our trading range, and catch some of that percentages. So I get that's a lot to take in. It is. It's hard to kind of just go over, one tool at a time or one indicator at a time. So I try to throw a couple in there. You guys can rewatch certain areas and kind of get an idea of what you like. But the important thing is it's trading style, guys. You're not going to trade like I trade. I'm not trading exactly like somebody else trades. What we'll do is we'll take the knowledge that we learn from listening to other people, watching other people trade, and get an idea of what's in their head. How do they know what's going to happen a lot of the times? How do we know this? We know it by just simply repetitive. We've done this so many times. We've traded so many times. We take some confluences together with the overall market, and it just gives you a good indication. And as you get more experience and you do more trades, take your bot, throw $100 in. You can't be too wrong then. If once it's 10% in or out of whatever you're doing, all right, get out of the trade. You're not losing very much, a couple of dollars at a time, but you're getting that experience. That's what's the important part is. You're getting the experience. Are you right? And if you don't want to do that, put a marker up here where you think price is going to go to a couple, candles later. Were you right or wrong? Write it down. Keep a trading journal. That's a very important thing to have, is a trading journal to log what your trades were doing. Mark down, hey, I entered this trade here. I closed my trade here. Was it up or was it negative? What were my thoughts? What was my hypothesis of what was going to happen? Just 10 words basically. Keep an area that's about 10 words to just give your idea. So that way you can look back and see what's been right the most, what's been wrong the most, so you kind of know, okay, I should think about doing this more, or this way of thinking hasn't been correct. So I hope you all enjoyed everything, guys. I appreciate it, and I'll do my best to get more videos out to you as soon as I can. Have a good night, guys.